Hey, how's it going, guys? This is Kyle from InvestiShare. I'm going to be going over the current market conditions and how what played out yesterday and what's going to most likely play out today based on the pathing of support and resistance that we have. So I'm going to dive into the charts and let's see what we got. All right, so when you're looking at the chart here, this is the 15-minute time frame. Yesterday, we were talking about this uptrending momentum and how if it fails against this point of control, after scooping up this liquidity that we were worried about, that we're most likely to come back down and target the value area low of this area. And we ended up coming down and we bounced off it perfectly before we having a good strong bounce back up. And we were concerned about the local levels of previous resistance and support and how it could impact the price action along the way down. So for those of you who have a hard time controlling your emotions, we can see that at this area we had a lot of bounces that kept us from hitting that target for a little while before we dropped. The squeeze kind of like enforced it to go down a bit more before we pumped back up here. But anyways, now what we can prepare for is a much more volume-based move because we're getting squeezed now against the momentum, this downtrending dotted line you see here, and the structural value area low for the structure on the 4-hour time frame. So we can draw a little triangle like this to tell us, okay, we need to prepare for a relatively large volume-based move soon. So we have a recovery window here. If we do not recover and go back to higher levels after breaking this, then we're going to have more likely a very bearish scenario. And not too bearish. I don't want to scare you. I'm just saying that we could end up going down back to around like 60,000 rather than the round 63 where we're hovering right now. So this is what I'm preparing for a long. I like volume backed moves. I like when I enter a trade, I want to know that a whole bunch of trade participants are coming in with me to support my entry. So that once I enter, I want to know that a whole bunch of people are entering with me to bring me to my target faster and to guard my capital. So there is some Fibonacci. There is a Fibonacci scenario that just played out really well here, but I try my best not to do a Fibonacci trade unless there's a lot of confluence. Fibonacci trades, for those of you who don't know, they allow you to pretty much catch the bottom of a move before going up, but you have to babysit that trade for a while before you can confidently start moving your stop loss towards your entry or higher. So if we look at the Fibonacci play that could have happened here, that you could have jumped on, from the most recent swing low to the most recent swing high, you can see that we had perfect confluence with the 786 level and the structural value area low. So you could have caught that knife like a ninja, and then you would watch the premium zone as a first take profit, like the 0.5 level is known as the equilibrium point between the discount and the premium zone of the Fibonacci levels. So we can see that we're starting to get resistance here, and expectantly you can see that we got some resistance here at the golden pocket in confluence with the local value area. But yeah, there's that. So we had the Fibonacci play here, but what I'm waiting for a good volume-based move is the 15-minute candle close above 64,952. Like right about here. If we get a 15-minute candle close above this, even more safely, just a little $50 above that at the structural point of control, right about here. If we get a close above this, then we can have a relatively large pump to around 66,600. And how I got that target, if you look at the structure that we have, we can grab from the neckline of the structure to the base level support and just click and drag that trend line to here, and we got 66,599. So basically 66,600. But along the way, it doesn't mean that we're going to hit that target. You got to watch, previous levels of support and resistance, and you can give yourself an idea of how the price action is going to path its way to that target to help control your emotions. So if you know what to expect, then you can have more emotional control of your trade for anyone who struggles with that. Because I remember when I first started trading, that was a huge thing for me. If I was in a long, the first red candle I'd see, I'd freak out and I would want to get out. So what you want to wait for is the candle to close around here, see if at the time if there's any swing low guards for your stop loss. And if there isn't one, if we pump straight up from here, for example, and there isn't a swing low guard, you can either look at previous structure, and if the previous structure says the risk to reward ratio isn't there anymore, then don't take the trade until you see some kind of behavior like this. Like you can see you have, the previous value area high and previous resistance here. So the behavior could look like something like this. We come up, get a rejection, come down, then we get the higher high close. And at that moment, you could take the entry, have your stop loss here, and still have the risk to reward ratio that you need to be a long-term profitable trader. Because at this point, it'd be over a 1-to-2 risk to reward ratio. That's a cool way of controlling your FOMO. Like if your risk to reward ratio isn't there, then don't enter the trade, because you can end up getting yourself hurt if you're trying to be profitable long term. Anyways, that's what I'm gonna be looking for. I mainly want to have the 15-minute candle close above the confluence of this local resistance and the structural point of control. And when we get that, I'll be targeting here and watching levels at 65,385 and 65,800. And this level is mostly going to probably cause us some hurdles. So we got to watch this very, very carefully, because if you look at the 4-hour time frame, or just zoom out in general, you can see that we had a lot of reactions to this level, lots of support and resistance. And we don't want to, expect for us to hit this target and end up getting slapped down before it and lose the trade. So what you want to see is along the way up, you can have pathing like this, right? And during that kind of pathing, you can start adjusting your stop loss or potentially taking profits if you see a swing failure pattern or a double top play out at that resistance. And you just got to listen to the market when it tries to tell you to get out early. So that's what I'll be preparing for the long scenario. Now, the bear scenario is not very beginner friendly. So if you're new to trading, unless we have some more structure to help define where to put your stop loss and where to enter, I'd wait this one out and maybe prepare for a long in the future. So the bear scenario, currently what we have for data is the uptrending momentum that we got here, the uptrending support. And what we can use in confluence with this is the order books to see if there's any buy walls, because these trend lines act as points of interest in the order books where people are trying to constantly undercut each other to try to get in. And that's what creates those uptrending levels of support. So if we look at the order books and we see a buy wall, like there's a small one here, for example, at 63,440, and you can mark those levels, 63,440. It looks like people are still trying to get in around here. So I don't think they're going to get in around here if we start seeing undercuts in the order books and it starts building uptrending momentum here. But anyways, if we start seeing a rejection around here at the local point of control in confluence with the downtrending momentum, then basically prepare for potential undercuts here. And that if we get a bounce, then we can use a bounce like that for a potential information of when to enter our short. But you're going to have to be pretty hawkish in the order books and see if there's any undercuts to previous levels of support. Around like 61,960 is a good one. 61,360 is a good level. And lastly, we could go as low as 60,000. So just watch out for that. There could be a bear scenario that brings us down to those levels. I'm a little bit more bullish, but of course it's not up to me. It's up to the market and what happens first. And then it's just up to us to make sure that we can recognize what the market's trying to tell us and then take action based off of that. Anyways, guys, I think that is it. If you have any questions, of course, you can reach out to me in the Discord. And again, we do have a promotion going on. We're allowing up to, we've got space for about 820 more members. And if you want to try it for $1, there's the coupon code down below. And you guys have yourself an amazing day. Thank you. Bye.
Hey, yo, I'm all about the crypto. In case you don't know, it's the hedge to inflation, the craziest sweep on the nation. No baby, every blockchain and created the same. But the learning curve feels like a bullet to the brain. Let me enlighten you. React to the max that would turn to a fire.